What was your path to becoming a real estate developer?
Do you remember your first commercial transaction?
And that's how you make money together. And
Well
that's
said.
that's the formula.
Well said. So today we're going to talk about how to become a real estate developer, and we have a good friend of mine, Steve Hittman from Crossroads Companies here today, who I've heard many stories about his start, so I'm very excited to have you.
Thank you, Eric.
What was your path to becoming a real estate developer?
I was a real estate broker coming out of college. I never took a real estate course. I never took a business course. I never took a finance course. My first job was working as a rental agent because I got the job because I reminded the person of their son.
Born and raised in New Jersey?
Use what you got.
This was in Manhattan.
Oh, okay.
I came out of college and
You're a residential rental agent or commercial?
I was a residential for
Okay.
1,100 luxury apartment units in New York City. It was a great job. I loved it. But every time I had to approve a potential renter's resume, I saw what he was making and what I was making, and I became very unhappy.
Lawyers do that with developers too.
So after about 18 months, even though I loved the job and they were fair to me, I said, how do I make more money? And someone, who don't remember who, said, you got to go into commercial realism, become a real estate broker. So I said, great. I quit my job after reading the New York Times. I looked at the ads, and one particular company said, we own more than 10 million square feet of office space. We have the best training program in all of Manhattan, and if you want to have a successful real estate career, join us. So I quit my job, and I did, and it turned out perhaps it was false advertising.
And that was a commission job,
I was going to
right?
say, was there a salary tied to that?
It was a straight commission, so I gave up my commission. I lived on a friend's couch for close to a year, who also lived in the same building where I rented. I gave up my apartment, which I rented out to someone else, which gave me a little bit of income. It took me about 18 months to really get ahead of the curve, and that's when I learned arithmetic and finance, because I figured out, gee, am I going to make money? How much money am I going to make? And in my head, I was able to visualize, wow, if I had a 5% commission and I leased 10,000 square feet and I leased it at $20 a square foot, that's $10,000 a year times 10 years. I just made a $100,000 commission.
So do you remember your first commercial transaction?
I remember every transaction I ever did.
Wow.
However, what I learned after a while was that it's hard to be a broker no matter how successful you are. And there are a lot of successful brokers. So there are some great successful brokers who make millions and millions of dollars, but the majority don't. So I'm talking about the majority and not the masses who don't, rather. So what happens is the house takes 50%. If you're a good broker, the house takes 40%. Then typically, because it's a lonely business, you wind up partnering with another salesperson. You're putting a team with multiple sales people. Then you're dividing your commission by the number of people on your team. And then the house is taking 40%, and then the government's taking, in New York City, with local taxes and state taxes and such, it was taking almost 50% of what you earn. So it was very hard to get ahead of the curve. So it wasn't for me. I started my own company, and I went through another 10 years of wandering through the desert. I made money, I survived, I got married, I bought a co-op. It's not that it was terrible. The company I formed, I called it Corporate Advisory Services, because I was still doing, I was representing large companies looking for office space, and I was earning commissions. And in that process, we ran into the savings and loans crisis, and I needed a job because I couldn't survive on a straight commission. And I had gravitated toward a niche called sale-leaseback financing. I would call highly leveraged companies, might have billions of dollars, but they were highly leveraged, and I would represent investors who would buy their commercial real estate and lease it back to them. And that's where I learned how to read a financial statement.
And was that the magic moment?
No, that was the magic moment. I failed when the savings and loan crisis hit me in the head with a club, because all the banks withdrew the credit from all the investors buying the properties, and I was an intermediary.
Right.
And without the transaction, there's
Right.
no broker's fee.
Yeah.
But one of the clients that I was trying to do a large transaction with was a supermarket chain. And they ran into a problem because they were highly leveraged, and developers who had deals weren't able to close them, and they needed somebody with a certain expertise, which I did not have. But I needed a job, so I said, I can do it. And they interviewed me. And after hiring an executive recruiter and meeting with 20 or 30 people, the chairman came out with the CFO and the CEO, and they said, you got the job. I still remember to this day dropping a quarter. Back then there was no cell phones, in the payphone and calling my mom,
Yep.
who's no longer here, say, Mom, I got the job.
Oh, that's sweet.
And it changed my life. It changed my career. And that's where I learned development. And I started building as a executive of the supermarket chain, securing sites, getting approvals, working with land use attorneys, working with developers, working with lenders. And at this point, I'm in my 40s.
And is that part of the plan? Like, I'm going to take this job and I'm going to learn how to
There was
become
no
a
plan.
developer?
No, the
Or is
plan was-
this job came up.
The plan was I have no money, I'm broke, and if I don't get a job, I'm going to be in the streets.
Yeah.
And I can't survive on a straight commission. And who's going to accept me at this late, because I felt old, even though today it sounds like a baby. To me, that was old to be in my 40s and be in that position and be married and
Yeah.
have the obligations you have when you reach your 40s. So
Scary.
it was not a fun time.
So by taking that job, that company wanted to go and build and expand their footprint of supermarkets.
But they had no money because they had 8-to-1 debt to leverage. So they had only $10 million to work with, which the average building would cost more than that to
Sure.
develop a supermarket. And that's where I found out I had a skill set I didn't know I had. The creativity, the
Right.
ability to look outside the box, the ability to work with investors and developers and planning boards and lenders and structure deals where they finance the developers or the lenders, our supermarket, and we wound up opening up 16 supermarket stores, which is a lot
Wow.
in New York State and New Jersey because of the highly regulated environment, the scarcity of land,
Yeah.
the competition with stronger supermarket chains. That company I left in the early 2000, I think it was 2000, 2001, and I formed my current company, Crossroads Companies. And I was lucky enough that 3 people I had worked with who were executives of supermarket chains and knew of my accomplishments said, would you like to be an advisor, a consultant? And of course I did.
Yeah.
So we all worked out different arrangement. That became my source of income. And then as I found locations for those clients, I wouldn't say I discovered, it's what I learned when I worked for the supermarket chain the prior decade, that a company could be a multi-billion-dollar company. It doesn't mean it has the ability to invest the cash sitting on its balance sheet in real estate because they have term loans and senior lenders, and they have operating covenants, and they have constraints on what they can use their money for, and the lender has a lien on their buildings and their equipment. So on its surface, you would think, oh, they don't need you. But in fact, that's how you make money. Whether you're going to be a broker or whether you're going to be a developer, you have to listen carefully and you have to observe. And in listening, you'll hear what they want to achieve and what's preventing them from achieving it. And then it's your job to figure out, can I help? How can I help? And that's how you make money together. And
Well
that's
said.
that's the formula.
Well said. That's exactly what I
That's
tell-
what happens.
That's exactly what I
Wow.
do. That's exactly what I tell my team to do. So having all that experience with having a large supermarket that you could then place in your new company, do you still have a large tenant that you control that gives you that ability to go out and place it somewhere?
I don't control any tenants. And in fact, sometimes the perception in the marketplace is a tenant owns my company, which is not true. I have multiple clients. Some are larger than others. Some are large supermarkets. Some are smaller supermarkets. Some are independent supermarkets. Some are part of grocery chains.
Okay.
And that was when I began. That's not what we have and who we are today. As I became successful, I needed to delegate. I couldn't do everything. So we grew over time. We have 14 people now. We have residential executives who invest alongside with us and find and create residential multifamily projects. We have construction project managers and foremen who have backgrounds in civil engineering, architecture, mechanical engineering. We have accountants and controllers. We have a team, leasing people who do advisory and brokerage, because they're all connected. So as we became more successful and we owned properties, initially we hired people to manage it, to lease it, to build it. And I realized that, one, nobody is ever going to truly do it like you would if you owned something.
Yeah.
And two, that's captive income. So there's a point where I'm paying more money out for someone who's working on 10 clients' project, or I could bring people in who are just working on my projects and have their total dedication and attention.
Makes total sense. So how would you give someone, or when you're out there seeing properties and you're looking and driving by, or you see a bunch of houses that could be pushed together into a bigger piece, how do you make your decisions on whether or not to buy something? Is it strictly profit based, or are you looking at how can I serve this community? Like, give an investor some tips as to how to get started.
So I'm not thinking necessarily how I can benefit the community, because I already know the community is going to benefit.
Okay.
If I am successful, which would take several years of my life, and some projects have taken 4 or 5 years or longer, going to create ratables for the community. Those 70% of those ratables are going to go to the school system and educate children. We're going to create hundreds of thousands of dollars of union or non-union jobs for subs. We're going to be buying materials, again, in the millions of dollars. We're going to create permanent jobs for people who have to work in those, if it's commercial stores or if it's residential, in those residential buildings. So the perception, unfortunately, is that developers are very wealthy. Some developers are, but a lot of developers aren't. They're just entrepreneurs. And what they're doing is they're putting their capital at risk, which is now addressing your question, Eric. What does a developer do? A developer hopefully saves enough money on his own or inherits some money, but more likely finds people of like mind, and they invest money together and they put it at risk and they buy a piece of land subject to approvals. And that's what differentiates a developer from everyone else, because it's contingent upon something that's probably going to take 18 months or longer. So I can buy a property for $10 million, but tied up with $100,000. My first deal, I tied up with $10,000 for $980,000. Subject to approvals. So once you get your approvals, you'll find the money, provided your arithmetic works. You'll have to have a return on capital that's attractive to investors. They're not stupid. They became investors because they understand investment. And they could put their money in stocks. They could put their money in bonds. They have many alternative investments. Real estate's just one. So you have to understand what's the cost of land. You have to understand what's the cost of labor, what's the cost of the materials, the steel, the concrete, whatever goes into a building. You have to understand what do you have to pay a bank, which changes because you may pencil this out in 2005 and then your store doesn't open up. You don't get your approvals in 2007. In my case, my first real estate project as a developer, I started in 2005 5 on the approvals, and I penciled in 7.5%. That was the interest rate. By the time the store opened and I took out the construction loan with the permanent loan, rates dropped to 5.25. The building I built that I budgeted $12 million, I built for $12 million, but the income I penciled in didn't change because interest went down. It was assessed at $16 million. So the loan I got was 12, so we had no money in the deal. That's how interest rates work.
That's how developers make money.
Now, developers lose money the same way. Because if I penciled in 5.25%, and that was and it was 7.5%, I would have, and it cost me $16 million, and I only got $12 million. I'd have to come up with another $4 million of equity, or I would lose the investment all the time I put into it. So, real estate, just like bonds or equities, are risk. They're risk adjusted, and it's called risk for a reason. There's no guarantee what the outcome is. So your due diligence, your knowledge of the market, you're not overpaying for a piece of dirt. You're understanding what you can do with that. I found early on in the commercial side that if I bought a 2-acre parcel of land and I could develop it for a drugstore chain, it still cost me, after 2 or 3 years of my life, $1 million, $1.5 million between the expenses associated with the development. But when I completed the project, it was only worth $500,000 or $600,000 more than when I put in if I wanted to sell it. And if I held on to it, it was only throwing off, especially if I had a partner, $2,500 a month. There's nothing wrong with that. But for the same amount of time and the same amount of money, if I tied up a 10-acre parcel and I leased it to a supermarket, maybe you threw off $10,000 a month.
Big difference.
A huge difference. Because the other misconception in real estate or development is you're going to get rich quick. No, you're going to work for the rest of your life.
Yeah.
You're never going to get rich.
That's what they keep telling me.
What you're going to do is
Don't tell Eric that.
you're going to build income streams over time, whether it's $2,500 a month or $10,000 a month, over 10, 20, 30 years, and all of a sudden you're going to have income you didn't think was possible, which you're probably going to put back in your business. And you're not going to, it's not like you have that money. The money has to pay for corporate overhead. The money has to pay for the next deal where capital's at risk. That's why I say you're going to work all your life. Yeah. It's a process. It's a business. It's an investment.
I was going to ask, but I think you answered the question. When you have these partnerships with these supermarkets and drugstores,
it's not really with the supermarket. So the supermarket's the tenant. Now, it's possible that the principal of a supermarket may say, I own the piece of land, but, could you bring it through the approval process? And if you want to invest with me, you can be a partner. It's possible I control the land, and I say to the supermarket operator, do you want to invest with me? But that's the investment. That's not that they're your partner.
right?
It's the piece of real estate and the circumstance that dictates whether you have a partner or not. And the partner depends on
You can afford it.
the individual's appetite for risk and whether they have any interest in investing with you at all or not.
So as far as getting approvals, because that's a big part of being a developer,
And we haven't touched on that yet.
we haven't touched on that yet, and that's probably one of my favorite parts because you never know what's going to happen when you go and throw an idea.
Sounds
at a
just
town.
like the scariest part.
Yeah. So how important are relationships for that, and how hard is it to go out and get approvals for some of what you're doing?
So there's 3 or 4 different questions there. Relations are the most important thing you have in your life. When I started out as a broker, I would make 100, 200 calls a day. I did that for 15, 17 years, every single day. And maybe at the end of the year, I had 10 prospects and maybe I closed 3 or 4 deals. Okay? I wasn't smart enough because no one explained to me. It's about relationships because one introduction creates credibility and is
Right.
worth 100 calls. So that's true whether it's a relationship with a lender, it's a relationship with a client, be it supermarket or drugstore or whatever the nature of the client is, whether it's industrial or whether it's residential. So, we do business if we're in this business with lawyers, with accountants, with land use attorneys, with civil engineers, with architects, with structural engineers, with MEPs, mechanical engineering, plumbers. Our world is filled with relationships, including the two of you I never met before. We're in a world of relationships, but it's just like real estate. How often do you go buy a piece of real estate and just drive to pick up a cup of coffee or go to your bank or go to a supermarket and all of a sudden you see a building going up and you said, wait a minute, when did that happen?
Yeah.
We're passing real estate all the time. We're just not looking at it.
Yeah.
So real estate's about higher and better uses for properties. It could be a vacant piece of land. It could be a building that simply time has passed it and there's a higher, better use and you could demolish it and create a new building. You still have the arithmetic, and then we get into the approvals. Now, the approvals are really first an engineering exercise and a mathematical exercise. You have to understand what's permitted as of right, because you could, if this table was a piece of land and it was 10 acres, and I could build a supermarket in 10 acres and it was zoned to permit that use, I have an as of right use. That's a much easier battle than if I need a zoning variance. That it doesn't, it's commercial and it's retail, but it doesn't permit supermarkets. I've had those battles. It depends on the type of zoning variance you need. There are D variances, there are C variances. Some of them are impossible. Some are more difficult.
So are you ever afraid to go and try something?
I'm never afraid, but I'm going to be very cautious before I put my money at risk. I'm going to spend money first with an architect and an engineer to investigate what's the permitted zoning, what are the variances I need. I'm going to have a public but pre-meeting, subcommittee meeting with members of the council or planning board or zoning board, depending on which jurisdiction, and show them my conceptual plan and get their feedback. They may say, over my dead body, I'm never approving a supermarket or a multifamily building or whatever it is you need in order to have a viable project. So it's very important before you risk your money to do as much homework as possible. And
so
then
you're getting introductions to the local people or the local councils and trying to build some type of relationship, and then you hit them with the idea.
It's not that you're building the relationship. They're really welcoming you with open arms. I mean, a lot of developers don't do it. A lot of developers come in with something they don't want, and then they're upset because they never bought it. They get the feedback.
I've watched developers do that because I represent a lot of them, and I would never advise that.
I've found that to be successful on a real estate project, you really have to have a partnership with everyone you work with. You have to have when I say partnership, I mean collaboratively. Sure. You have to be able to collaborate with the client who's the user. You have to be able to collaborate with your bank so they understand full disclosure who you are, what you've done, what your track record is, so on and so forth. And you certainly need to hire a good land use attorney who has a favorable reputation in town because they've been successful working with the town. And you won't know everybody because you can't know everybody in every town, but they will because that's your business. And they'll guide you with your development team, your architect and your engineers. And before you meet with the town, you'll have done your homework. So when you meet with them, you're not wasting their time. And then it's really, here's my plan. Don't throw up in it yet. Tell me what you like and tell me what you don't like. And then we'll see if we can incorporate some of those concerns you have.
So I know there's a lot here on everybody's minds with this because there's so many options and so many details about being a developer, but how important is that attorney that we're picking for the town? And follow-up is time frame. Like what is your normal time frame for getting an approval? Does it take forever? You talked about some years of a project. So
the land use attorney is very important, but there are many attorneys who are part of your team are very important. You can have an environmental issue. You need a good environmental attorney. You need a good transactional attorney, just as important as the land use attorney, because what you're putting in writing is going to determine the outcome. So the agreement is really a collaboration between, if you don't have an experience, a transactional attorney has development experience. And that's That's the best advice I can give you. Over time, you'll have experience through your mistakes, because that's what experience is. It's what you learn from what didn't work.
Right.
So you really need to surround yourself with very capable people, and an ounce of prevention is worth a pound of cure. So don't think if I can save some money, this person will charge less. That's the right way to go.
Been there, done that.
As a developer, do you try to stick to a particular area, or will you develop nationally, or is there danger in that?
I won't, and I don't think. I think it depends what you develop,
Right?
And,
and who your partner
what kind of
are.
organization. I had my child late in life. I was 49 years old, and I knew I didn't want to. I wanted to grow up with the child. I wanted to participate. And be part of his life. So I made a decision when I started my own company that I was going to work within, an hour, 2 hours max of my home, because I knew I would have to go to planning board meetings. I knew I wouldn't be home on certain nights, and I wanted to own my own company and not work for someone where they were dictating what my schedule could be. It turned out to be the right decision for me. It didn't mean
family first always.
And so that's the answer. For me, within 100 miles of New Jersey, you're in Connecticut, you're in New York State, you're in Philadelphia. I mean, you're covering a lot of territory. And you probably have one of the most populous, strongest demographics any place in the country. So you're not going to lack for opportunities. It reminds me of a story, and I'll keep it short. When I just was on my own, I wanted to be a developer, and a more experienced developer would come, and because we were leasing space in HQ, which is, you would just lease out an office. I was just beginning. It wasn't your office. A receptionist would answer the phone. They'd say, Crossroads Companies. So this person was a developer, older and more, and he'd always come in my office and just start talking. He'd say, Steve, can you find any deals? I can't find any deals. And every single day he did. And I was thinking to myself, well, the reason you can't find any deals is because you're talking to me. Why don't you just go find some deals?
Good. That's great advice.
And I mean, I guess that leads us into, this has been a great interview. Thank you so much for your time. You're a super successful guy, and for you to talk us through and our viewers through this is priceless. What is your most important tip, or the tip that you want to leave our viewers with lastly, who want to become real estate developers?
I'm going to make it a little broader. Whether you want to be a real estate developer or you want to be president of the United States. By the way, it's better to be a real estate developer.
But hold on. We may have both. Shortly.
And Donald Trump has done both. So you're limited. Your limitations are the limitations you place on yourself. Everybody has fear. Everybody has anxiety. Everyone doesn't know. But we know we can stay in bed. So let it go. The sun will come out tomorrow. The sun follows the moon. Morning follows the darkness. You're going to have ups. You're going to have downs. And you just have to understand it's not unique to real estate development. Same thing has probably happened to the person who is, in some other profession. Life has many ups and downs. You can't give up.
The Vanderbilts.
You have to learn from your mistakes. The most important quality you can have is to observe and listen. Because as someone once told me, if you're talking, you can't learn anything. And if you know everything, there's nothing to learn.
Thanks for watching this episode. Now don't forget to like, subscribe, and leave a comment. And we'll see you next time.